Hey traders, welcome back to the FXE YouTube channel. Hope you all had a great trading week. For me it was pretty good at the beginning of the week, but EU completely threw me off guard towards the end of the week. Once again, I'm having difficulty sleeping tonight, so I figured I would work on my weekend analysis video instead. And I'm going to do something different for this week's top-down analysis. So first, I found that IDC data feed has the most EU data, so I'll use that instead for the higher time frames from now on. But with the caveat that I really can't understand, it contains data before the euro even existed. And second, I'm going to do a little history lesson about the euro. And just a quick note, I'm going to start doing less and less session analysis videos. Reason being, from what I can see, there doesn't seem to be that much interest to watch them. And it's becoming more and more difficult to commit to doing them twice a day. And another problem that I have is, for whatever reason, the videos are taking a lot longer to process. In the past, I remember they only took like maybe 10-15 minutes to process, but now many times they take 20 to 30 minutes, and I'm not really doing anything different aside from adding an audio track, and I don't see how that could extend the processing time like 2-3 times. But the problem is that keeps me away from the charts at the most critical times when I need to be watching the charts. So I mean, it's really becoming more and more troublesome for me. But if one day I do start getting a bunch of subscribers and viewers, then I may start to do them a little more frequently. But in the meantime, I'll probably just do an occasional session video and maybe a daily video instead, or potentially just do a weekend and a midweek video instead. But if you guys do want to see more frequent session analysis videos, then you know what to do. Just start watching them more regularly and start liking them. I mean, once I see more interest to actually watch them, then I'll definitely do them more frequently. But for now, let's get to the main content of this video. So starting with the history of the euro, I started to do some research on the euro and got curious about the history. So I figured I'd share it with you guys. Some of you guys may find it interesting as well. Some of the key dates regarding the euro history are as follows. On March 1979, the European Monetary System, or EMS, was created. That started fixing exchange rates onto the European Currency Unit, or ECU. It was a predecessor to the euro, and it was used as an accounting currency to stabilize exchange rates and counter inflation. On December 1991, the decision to create the European Economic and Monetary Union, or EMU, which involved the coordination of economic and fiscal policies. And then on February 7th, 1992, the European leaders reached an agreement about the currency union with what was known as the Maastricht Treaty. And then on June 1998, the ECB was created. And then on December 31st, 1998, this was the first trading day for the euro. It started trading at $1.1686 and ended the day at $1.18. By the end of 1999, the price dropped down to parity with USD. I mean, just as it's done this last week. And then on January 1st, 1999, this was the official start of euro. So exchange rates were locked at fixed rates against each other. The euro became the replacement of the ECU, but the existing banknotes and coins were still used. And then a couple years later, or 3 years later, on January 1st, 2002, the euro banknotes and coins became available and were introduced to replace the local currencies. And then 2 months later, on February 28th, 2002, the previous local currencies ceased to exist as legal tender, but they still could be exchanged at banks until the end of June. But depending on the country, some extended them longer, some tried to cut it down even shorter. And just some interesting notes that I also gathered while doing my research. March 29th, 2017 was the date that the UK formally began the withdrawal process from EU. And if you look at what happened from that date, EU started a bullish leg. And then on January 31st, 2020, this was the official withdrawal from EU. And since that day, EU has just more or less been plummeting ever since, up until now. But anyways, that was my history lesson. I hope you guys found it interesting. So now on to Dixie. Starting with the yearly time frame, I thought you guys might find this interesting. So even though Dixie has been crazy bullish, on the yearly time frame, it's still bearish. And if we go to the monthly time frame, so on the monthly time frame, you can clearly see it's bullish. It's creating higher highs and higher lows. But one thing that's interesting is we tapped into a monthly supply zone, and we are starting to have some reaction off of it, as you can see from the wick. And then if we go to the weekly time frame, so again, weekly time frame, it's much more obvious how bullish it's been, with the higher highs and higher lows that have been created since the end of 2021. But again, on the weekly time frame, we tapped into a weekly supply zone, and as you can see from the wick, we are having a reaction off of it. And if we go to the daily time frame, so clearly very bullish on the daily time frame as well. But again, we tapped into daily supply, and I believe this is a supply zone. Yeah, it's a daily supply zone. And what's different on the daily is you can see not only have we reacted off of it, but today we've created a bearish candle. And then if we go to the 4-hour time frame, where I'll do the bulk of my analysis, so clearly you can see the structure is still bullish, but as of right now, order flow has shifted bearish. We're currently testing this 4-hour demand right here, and this demand we'll need to watch really closely to see what happens, whether it reacts off it, reverses off of it, or pushes through it. And you can see where I got screwed up earlier in the week. So after Wednesday's price action, we created a chalk here but ultimately it turned into a fake chalk because what happened next? Price pushed up and created a higher high. Really completely screwed my bias the latter part of the week. In terms of overall bias, I'm still bullish, and I'll remain bullish unless this demand gets broken and this sell side liquidity gets taken out. And now on to EU, using my trusty IDC data feed. On the yearly time frame, so I mean, you know, it's extremely bearish right now, but if we look at the yearly time frame, it shows a different story, where the structure is actually bullish. As of right now, we have a higher low. If it continues down and breaks this low right here, then structure will start to turn bearish. But until then, I mean, technically we're still bullish on the yearly time frame. If we look at the monthly time frame, so it's very apparent that we are very bearish. But one thing to note is we've tapped into a monthly demand range, and we've had some reaction off of it, but now it's halfway through the month. I mean, let's see what happens next. On the weekly time frame, so we've had this huge bearish leg that's been coming down since the beginning of the year. And one thing to note on the weekly time frame as well, we've tapped into a weekly demand zone. And on the weekly time frame, what happened the last time we hit an extreme low? Here we reacted off a weekly demand and reversed. Here we reacted off a weekly demand and reversed. So I'm really curious to see what happens next. You can see we came down quite strong this week, but we've pulled back more than half of that weekly candle already. So we've had a strong reaction on a weekly time frame. And then if we go on the daily time frame, so once again you can see we're clearly bearish, but once again we tapped into a daily demand zone. Not sure I can see it so easily, but if I go back, so it's the top one. So there are more daily demand zones all the way down to the lows, but if you look at this one is a significant one, because you can see we created an order block here. So we created an order block here, and then we pushed away from it, pulled back down. This was the last mitigation before shooting up. So potentially this could be a strong demand zone. So it's a demand zone at the top, and like I said, there are quite a few below it. But based on what I just explained regarding this demand zone, it has some potential. And once again, you can see the reaction of the demand. So we pushed away from it, creating a bearish candle with a big wick, and then the candle after was a purely bullish candle. And for the 4 hour, let me go back to forex.com. Actually, I want to check on forex.com on the daily if there was anything else to mention. One thing that's quite important to note, I already mentioned it before during the Euro history, but we did reach parity. So why is it here? I must have moved it. Yeah. Okay, something's wrong here. Okay, so we did reach parity, and we actually went through it and then reacted off of it after liquidating parity. So going to the 4 hour time frame, so once again, 4 hour is where I'll spend the majority of my analysis. So as you can see, we're still bearish for the time being. We had that fake chalk here that completely screwed me up, because what happened next came right down and broke the lows. We already broke parity previous to that, but this was a huge liquidating wick. They came right back up and turned bullish after. What else can we see? We can see the order flow is shifted bullish. The main thing I think we need to watch for on the 4 hour time frame is what happens next. Do we break the range high again and start to show signs of turning bullish, or do we continue down and break the lows again? So what I'm looking for mainly is it's going to be a reaction or a reversal from the 4 hour demand zone. As I explained before, I mean, we have a strong wick here, shift of order flow turning bullish. If we come down before breaking this high and test the demand and react off of it, that could be an early sign for reversal. But again, more importantly is actually breaking this high. If we break this high, then it'll solidify my thoughts that we're shifting bullish. But again, I mean, we could have another fake chalk and come right back down and break the lows. So we'll have to be a little careful with that, as it's already happened once. One thing I did want to mention is when we came down and we created equal lows here and pushed up, creating that fake chalk, the fact that we had those equal lows was actually a sign that we may come down and take them out. But after taking those equal lows, I mean, I'm not sure if there's any more liquidity resting to the downside, because you saw what happened every time we came down. Yeah, ever since here was when we broke structure, we came down, created a low, left some liquidity behind, and then pushed up, and then came right back down, creating liquidity, and then eventually taking it out. Even here, came down, creating liquidity, taking it out, creating more liquidity, coming down and taking it out. Here we came down, we had that seller's climax, creating liquidity, pushing up, and then coming right back down, taking it out, creating more liquidity, coming up for a pullback, and then once again taking it out, pushing back up to supply, and then taking out that liquidity again. And then here we had the seller's climax, pushed back up, came back down, and only on this push down we broke parity, but in the process of doing so created those equal lows, then had that massive push up, creating those fake chalks, and then after that coming right back down and taking out that liquidity. So yes, you can say that last week down left some liquidity behind, but I mean, who knows? It can just come back down, mitigate it, and then push right back up. It could come right back down and take it out, but there are some signs, especially if this high goes, that we may be shifting for a bigger pullback, or potentially signs of a bigger reversal. So this pullback is probably good to know. It came back to the 618 fib level, and then from there pushed down. Right now we've exceeded the OTE. I believe the OTE is between the 618 and 70. We've come up probably above 80 or 0.8, and had some reaction off of it, and currently playing around. We could potentially come down from here. I mean, it makes sense. We've had a lot of liquidity building up. You can see with this doji candle in the last part of New York session. So this liquidity buildup could push the price right back up, break the highs. It could also push the price back down, back into the demand, and then from there we'll have to see what happens. So in terms of my bias, for now I will remain bearish, and I'll continue to look for shorts until the range high is broken. But at the same time, even if it breaks, I'll probably trade shorts because I am expecting a pullback if this high goes, well, especially if this high goes. At the same time, I won't be afraid to take longs either from discount. Say for example, we don't break the high here, come right back down into this 4-hour demand. Definitely, I'll start looking for confirmations to look for longs to take it to the upside, or at least a premium. But right now, I mean, we're coming really close to the range high. If we look at where the liquidity is resting, it's going to be resting here, and it's going to be resting here. If it were to go and take liquidity on one side or the other, what seems more obvious? 20% from the top and taking that liquidity out, or 80% from the bottom and going to take that liquidity out? I mean, we're much closer to the top, so I wouldn't be surprised if it goes and takes out the liquidity on the upside before coming down and taking out that demand. But it should be noted, if we do start to see more signs of reversal, I mean, historically, every time we've had extreme lows or highs starting the reversal, price tends to consolidate and build liquidity for ages before it actually starts a real reversal and moving to the desired direction. If I go to the monthly time frame, I'll give you an idea of what I'm talking about. So if you look at what happened here, I mean, if we take this, I mean, we could probably say anywhere from here, maybe here, to here was the distribution process. Let me use this one instead. So anywhere from here to here was the distribution process, and even breaking the lows, if we include that, that's 9 bars, that's 9 months. And if we look at the last bullish shift, I mean, it didn't actually confirm that it was bullish until this broke. And if we take that from where it looks like we had the selling climax, that's 10 bars, so almost a year. This one right here was really fast. It was only 4 months. Yeah, we had a clear shift here, break of the lows, and nothing clear in terms of Wyckoff on that distribution. But even that one, I don't know why it says 3 bars when I have 4 bars selected. Anyways, this one right here was a massive one. So we can say that was a selling climax there. Break of supply confirming that it turned bullish. 28 bars. That's 2.5 years. I mean, that's just the last 4 examples. I mean, you can see we're not talking about 1 day or 1 week for this price to just shoot to the moon. It's very likely to sit here and consolidate for a while before it does actually move up. I mean, say this was the seller's climax and this was the spring. I mean, even then, we probably have at least maybe 2-3 months before price starts to move in the desired direction, if we do have a reversal here. And keep an eye on this path line that I draw. If we go down to the daily and look at it, okay, let me make it visible on the daily first. Let's go to the weekly first. So what does that look like on the weekly? So if we look at it on the weekly, so from here to the low that was created, assuming this was a seller's climax, 1, 2, let me just bring up the tool again. So that's 9 bars. So that's already 2 weeks. And if you look what we need to do from now on, we still need to show some signs of strength, assuming this was a seller's climax. Come back for a deeper test, maybe a bigger sign of strength, maybe a last point of demand, and then after that pushing up. So considering it took 9 weeks just to do this, if we need to do a few more rounds of ups and downs, I mean, we're already talking about 9 months, something like 9 months. If we look at that on the daily, wow, so if we look at it on the daily, so I was talking about a potential shift after breaking this high right here, but if we're assuming this area is a seller's climax, then we have like just about 800 pips to go for the first sign of strength, and then a retest, another 800 pips, and then another sign of strength, probably 1,000 pips, and then a pullback to last point of demand, which will probably be like over, I don't know, could be anywhere actually, several hundred to 1,000 pips, and then only after that the break to the upside. So you can see it's not something that's going to happen overnight or just in 1 week. I mean, it's going to play around for some time. Even if we get a nice move to the upside, I mean, potentially it could just be a larger pullback to, one of these daily supply zones, and then come right back down for a test, if it tests and doesn't break the bottom. And then after that, continuing on with the cycle, to push up higher, to show more signs of strength, and then come back down. I mean, yeah. I mean, at minimum, a few more months, but more likely, maybe a year before it does actually start reversing and we're like way up here. I mean, just look at this. I mean, how much it played around, came back down, created a lower low. I mean, similar to where we're at now. And if we've already done this part here, then I mean, yeah, we still have a few more weeks to consolidate, build a lot of liquidity, to push the price to the upside. I mean, if you think about how long the institutions have been entering sell orders from this point all the way to this point, that's a lot of sell orders that they're going to need to get rid of before they start pushing the price up. So push up, gradually get rid of those sell orders, let the price come back down, or manipulate the market by adding some more sell orders to give the impression that the price wants to come down, and then after the price comes down to a reasonable level, getting rid of those sell orders again, pushing the price up once again, shaving off more and more of those sell orders, and then bringing the price down one more time, maybe some more manipulation in the process. And then after that, once they get rid of all their sell orders, and ready and have enough buy orders, I mean, to make a shit ton of money, only then they're going to start really buying up the market. But again, if you look at how many months of sell orders they've accumulated up to now, that's a lot of orders that they're going to need to get rid of before they start pushing the price up. But anyways, that's more or less it for me on you. I hope you guys enjoyed this weekend analysis video. I was somewhat rushed putting it out. I didn't spend as much time studying the charts as I normally would. So if I do see something significant, then maybe I'll post another supplemental video before the weekend's over. But anyways, let me know your thoughts about this video. If you enjoyed it, if you thought it was useful, drop a comment below, and also your thoughts on your expectation of price action in the coming week. And if you found value in this video, please be sure to like and subscribe to ensure you don't miss any future videos. And have a good weekend, guys. Get some rest. I'll speak to you next week. Peace.